Welcome to this QuickBooks tutorial on construction and general contractor business. So if you run a construction business, you run a general contractor business or a related business, or maybe it's an arm of one of your existing businesses, this tutorial will show you how to use QuickBooks Desktop to manage your construction company. So what is a construction or general contractor business? It's a business that is engaged in the service of helping clients to execute projects, construction projects, maybe construction of building, construction of roads, construction or repair and renovations or related services. So anything in that industry. So and I'm sure that it's not just something you would want to rush in when it comes to managing your business in an accounting software. So this tutorial will help you understand the following. So I've taken my time to detail out or show you what some of the things that we're going to be discussing in this QuickBooks tutorial. First, we're going to be looking at setup. Setup is very, very important. In short, before you start using an accounting software, it's important you learn the foundation of setup. Why? Because if you get your setup wrong, it might be difficult for you to post transaction correctly. So that's why setup is the first thing you need to do. And what does it entail? Well, we're going to be looking at chart of accounts setup for construction, and then how to set up a class. We're going to be looking at the client and project, how to add clients or customers and their relevant projects. We're going to be looking at vendors. We'll be looking at inventories, sales tax, bank accounts, and supervisors cash. So what this entails is that we're going to look at how to add your bank account to the system, and also how to add relevant cashier or relevant supervisors. One thing about construction is that each site or each project has a project supervisor, and the project supervisor is supposed to have certain amount of cash to take care of on-site expenses. So we're going to be looking at that in this section. We're also going to be looking at inventories of construction materials. How do you manage construction materials? How do you manage your cement, your gravel, your sand, the water, every materials that you need on construction sites? How do you manage them? And also, how do you track what you have in store? Then we have site locations. It's also important for you to track construction that is going on in different locations. So if you're a construction company that is so established that you can carry out construction in different states, in different regions at the same time, this is very important for you. Then how do you estimate, how do you create and estimate a quotation by project and also by site? Meaning that whenever you create a quotation, how do you map it to a particular project? How do you also map it to a particular site or a particular location? Then we're now going to be looking at advance payments. When a client makes an advance payment before you start the job, how do you post that on the system? We'll be looking at invoicing. Sometimes you might need to invoice client based on progress of work done so far. How do you invoice the client? Or you can invoice the client in total. How do you receive payments and then withhold tax? Now, there are times where clients will pay you, but they may not pay you total value of your project. Some of them will withhold tax from you, which is regulatory, which is driven by law. How do you post that to the system? Then purchase order in case you want to restock your construction materials, and then how do you receive those inventories into store? Then we'll look at your relevant expenses. These expenses will cover direct costs on site, and then we're also going to be looking at banking and reconciliation, and then also inventory reconciliations. Then we can move to reports. Your reports here we'll be looking at your profit or loss by project. So on that report, we'll look at profit or loss by project, by site, and then you can also see your balance sheet, your cash flow, that's financial position of a construction, cash flow, etc. So there's also room for budgeting at a construction company. So let's quickly go to our QuickBooks to start this tutorial. So the first one we're going to be looking at is our setup, chart of account setup for a construction company. So you will see right here that I've already set up the company, and here we're going to call it Lewis Construction and Contractor Company. That's the name of the company we're going to be using to discuss this particular industry. So first one is chart of account setup. What is chart of account? Chart of account is an account that categorizes all your transactions to income, expenses, asset, or liability. Everything you post in an accounting software can either be an income transaction, an expense transaction, an asset, or liability. So this is very, very important. That's why you must set up a chart of account first. Now, the good thing about QuickBook is that while you're creating this company, you have a room to select the industry that you're going to create this company for. The essence of that is that the moment you select the industry, QuickBook has a recommended chart of account or a skeletal chart of account already set up on the system. So that gives you an idea of how your chart of account should look like so that you don't start from scratch. And also it helps you to expand on the existing chart of account. So when I click chart of account here, if you've watched my video on manufacturing, you will see that chart of account for manufacturing is totally different from a construction company. So you can see right here, we have chart of account for a construction company. You're going to see term like construction in progress. You're going to see term like construction income. For manufacturing, their income will be sales. But for construction and contractor, you will see construction income. And then you're going to see something like blueprint and reproduction, bond expenses. You can see right here, bond expenses. You will see construction materials, equipment rentals for job, other construction costs, subcontractor expenses, tools and equipment, workers' compensation insurance, auto and truck expenses. So you can see that these are chart of accounts heads that are connected to construction and contractor companies. So what if you want to expand the income stream? If there are other areas you earn revenue from your construction business, you can as well input that on the system right here. And then one other important part of a construction company is class. So it's possible that you might have construction going on in different locations. So how do you activate class? You come to edit, you click on preferences and then accounting company preferences. We're going to activate class right here. Now, if you require account numbers for each of your chart of accounts, you can as well input the account numbers right here and then you click on OK. Why are we activating class? The reason we're activating class is because some construction company can carry out multiple construction projects at the same time. A perfect example of that company is we have Julius Berger. Julius Berger is a very big company that can handle multiple construction in different locations at the same time. So they have that capacity. So while they are doing that, it's important that they're able to manage cash flow, able to manage their expenses, and also be able to keep their books in order based on each of these locations. So that's why we're activating class. So it works for companies that want to track activities in different locations. Class also works for departments. So if you're a supermarket and you have grocery, you have the drink department. So, but that also depends on your industry. So your use of class depends on your industry. But most of the times, most businesses use class to track locations or sites. So we're going to activate class right here, and then we click on lists. You see a class list. So this is where, and then you can also use this for cost centers. You can see equipment and rental cost, labor cost, material cost, other costs, revenue, and subcontractor cost. So you can use it as cost center, and then you can also use it to track location. So we can as well come here and say, oh, we have a location in, let's say it's an international construction company. So we have a location in the US, and then we have another location in London, and then we have another location maybe in Nigeria. So just an instant. Now, if you run a construction company like this, it's also important that you activate multiple currencies. So we can come to preferences, multiple currencies, company preferences, and then I use more than one currency. So you can set your currency maybe to the US dollar. So let's assume that the construction company has its major base in the US. So our home currency will be USD. And then you click on OK. So the moment you activate multiple currencies, automatically there will be need for exchange rate. So meaning that you can actually add foreign clients and their receivable balances, and then foreign vendors and their payable balances, as well as your foreign bank accounts and their respective balances. So that is what each of these means. So now we've discussed the chart of account and what you can do there. Remember, you can add more accounts to your chart of accounts. If I go to list, chart of accounts, how do you add an account? You go to account, you select new. So what are you adding? Like I said, chart of accounts categorizes your transactions to income, expenses. So meaning that whatever account name you want to add, make sure you categorize them to their respective or appropriate account type. It's important. This is what the system will use to determine the type of report that you're going to find that account name. For instance, if I'm going to add an account called, let's say, construction income or construction service income. So let's say the company provide construction consulting to other construction company, maybe to guide them. Now that's an income. If I'm going to add that to the system, what am I going to do? I'm going to select income. The reason I have to select an income is because that amount, that account head it actually shows me how much I have earned from that services. So, and it is not just the name that determines whether it's an income or expenses, is the account type that determines where it to be posted. So that's why we're selecting income. So here we'll call it construction service and consulting. Construction service and consulting. So let's just say construction consulting, and then you click on OK. Like I said, what determines the report that you're going to find is which ordinarily should be P&L or profit or loss is the type, account type, and not necessarily the account name. So account type is very important because it is the feature that will determine the report that the system will take this account heads to. If I select bank, system will assume that this is a bank account, but we don't have anything like construction consulting bank account. So that's why you must select the appropriate account type when you are adding your chart of accounts. If I click here, save and new, assuming we want to add another type of expenses, let's say director's bonus. Director's bonus is an expenses. So if you select an income, system is going to show or assume that any transaction that passes through director's bonus will be an income, not expenses. Why? Because the account type is income, which is why we must select as expenses. So whenever you're adding an account name, make sure you select the right account type because it's the account type that the system will use to treat that transaction and also take them to the relevant account. So you have your director's bonus and then you click save and close. So that's how you treat each of the account head that you add to the system. So you can see that the account type for this auto truck expenses, bank service charge, business license permit, insurance is not income. The reason it's not income is because they are expenses. But how do you determine if it's an expenses? Is because the account type selected here is expenses, expense. So that's why you have them as an expenses right here. So the type of account is very important because it's exactly what determines the type of report where the system will take this account name to. And then you have your cost of goods sold. These are like your direct cost. So every cost that are tailored to the construction company directly, they are all your direct costs. For instance, bond expenses, construction material cost. Now, this bond expenses majorly has different names. In some country or in some organizations, they can call it advanced payment guarantee (APG). So, what is bond expenses? Sometimes when you win a construction project, the clients will require you to tender or be able to get the money from the bank. Now, what that means is that they will only give you a certificate or a document to prove that you have a project with them, but you will be required to source for the money to start the project. And then maybe if the project is at certain stage, then they will require you to send in your invoice. So because the project is huge, some construction company will have to go to the bank to request for loan. So they call that APG, advanced payment guarantee. In some company, in some other region, they call it bond. So now when the bank gives you that loan, you're going to be paying expenses. You're going to be paying interest on that loan. It might be very small. So the interest you pay on that loan is what we call your bond expenses. So that's like your interest expenses for collecting a loan from a bank to help finance that construction project. So we have other type of chart of account. We have the equity, we have your current assets, and then so on and so forth. Now, another thing we're going to do is we're going to check if inventory is activated on the system. You go to preferences, item and inventory, and then you can see that inventory is activated on your system. So let's move to the next part of our setup. The next part of our setup here is client and project. How do we set up client and project? It is one major part of a construction company because when you have a client, it's important you track all the projects that you're executing, all the projects that you're actually carrying out for that client. It's also possible that you can have a client and execute multiple projects for that client. So, number one, we're going to add our client under the customer center. So, we'll go to customer centers. This is where you add all your clients. This is where you add all your clients. This is where you add all your customers, depending on what you call it in your region. So here you go to new and then you select new customer. So let's assume that we have our first customer as US FBI, for instance. So we have US FBI as a customer. You then click on OK. Now remember, this is just a customer. This is a customer. Now, we might probably have different projects we're executing for US FBI. For instance, we could have construction of IT center, construction of IT center. Now, the customer itself is US FBI. The project is construction of IT center or an investigation center. So we go, then come down here, look at this section. We have new customer, we have add job. Now, for a construction company, you're going to use new customer to add the customer name, and then you're going to use job to add each of the projects you're executing for that customer. So you're going to use new customer to set up the customer, and then you use a job to add the project for that customer. So we come here, you click on add job, and then you say IT center, or let's say investigation center, which is going to be a sub of US FBI. Now, as at when we're setting up this record, so let's say our opening balance date is 31st of December, do we have a receivable balances for this investigation center? This is very important. Now, why are we asking that? It's possible that before the deployment, before this QuickBooks setup, we will probably have a project that we are currently carrying out on this investigation center that we're building for FBI. Now, if they've paid us a certain amount of money as advance payment, and then, or sorry, as part payment, and then we have a balance. It's the balance that we're going to impute right here. So let's say we have a balance of 23 million USD. So 23 million USD is not the cost of the project, it's the receivable balances as at when we're setting up. So let's assume that the total cost of the project is 10 million, and then they pay you 3 million. As at the time you're setting up this QuickBooks, the balance is 7 million. What you're going to impute here is 7 million. So when you have 23 million USD, it means that as at the time we're setting up this QuickBooks, we still have a receivable balances of 23 million that we are yet to receive from US FBI. So you come here, you click OK. Now you can see the way the system will arrange it. US FBI is the customer, then the project itself is investigation center. So let's also enter another project. You come here, you go to admin. So let's say we have the admin office building or renovation of admin office. Renovation of admin office. So this is another project which will be under US FBI. Now, do we have any existing receivable balances? Yes, you can come here. I've already explained what this means, which is as at 30th, 31st of December 2022. And then you click on OK. You can see how the system is going to help organize the customer and their project. This is the customer, this is the project. So let's add another customer entirely. So let's say this customer is SAP, and SAP is in Germany. So you come here, the currency will be in euro, and then you click on OK. You remember we activated multiple currencies, so we're looking at customers in different regions. We assume that it's a multinational construction company that carry out multiple projects in different countries at the same time. So you can see right here we've added SAP. SAP is a company that is a SaaS company, and then you add a job. So you're adding SAP Enterprise Center. So this is a new project from SAP. Who is the customer? The customer is SAP, and then the project name is SAP Enterprise Center. You click OK. You can see right here again how the system is going to. You can see how the system is classifying each of the projects under their relevant customer. We have the customer itself as SAP, and then we have the center as SAP Enterprise Center. You can as well come down to add job, to add SAP staff training building, and then which is going to be under SAP itself. Now, when you're adding a job, make sure you select the customer itself as the customer and not the sub project, because the system is going to classify it under that sub project. So you must select the customer itself and then you click on OK. So you can see right here we have SAP, and then SAP projects under SAP itself, and then it is SAP Enterprise Center, staff training building. Then we have USFBI at this. So let's add another customer here in Nigeria, and we're going to call this customer Dangote Limited. So this is another customer entirely. What is the country? Remember, when you select this currency, don't think that the system only allows you to add the Canadian dollar, US, Japanese. You can also click view more currencies to add more. So right now, our currency here will be in Nigerian Naira. And then you click on OK. So you can then add a job and say Dangote Finery Support Center. So there's a building called Dangote Referral Support Center, which is under Dangote Limited. You click OK. You can see this is how you organize your customers and also their respective projects. So this is very, very important. This is the key part of a construction company and general contractor that you should know, because as you're executing each of these projects, you don't lump everything together. The reason that you have to do this is because at the end of the year, there are times management will not just be interested in the overall company report, but project specific report. Let's see each of the projects and which is more profitable for us, so that if we have similar project like that, we will know if it's important or if we were to take up such project or decline to that offer. So this also tells you whether a project is profitable or not. So that's why we have to classify them under each of their respective customers. And then we have the vendor center. Now, the vendor center is almost similar to the customer center. Who are your vendors? Your vendors are your product suppliers or service providers. So if you come back to your vendor, so you go to new, add multiple vendors. So your vendors could be, let's say you have a company like ADC Materials. ADC Materials help supply all the inventories that we use. You come here, you add the name ADC Materials, you come back again, new vendor. Let's say you have another vendor called FedEx, helping to move some of your parcel from one region to another. Now, if you have a payable balance to FedEx as at the end of the year, you can as well impute that right here, 116,700 USD payable to FedEx. That means before that time, or as at that 31st, you had a balance that's supposed to be paid for services rendered, which remain unpaid when you set up your QuickBooks. So you have FedEx. So you can as well add multiple vendors to this system. So this is quite straightforward when it comes to adding a vendor. You have your construction materials supplier. Then if you have a service provider, maybe like an auditor, you can also come here. You can say A and C CPA or certified public accountant or chartered accountant, whatever name you call them. And then you come back here. As at 31st, we have a balance of one, and we're owing them 1.2. You click here, you can see. So these are your makeup of your payable balance. Now, if I go to my reports and check customers and receivables, it will show me all the customers you can see right here and their receivable balances. Then, if I go to report again and select vendors and payable, it will also display all the vendors and their payable balances right here. So that's how to set up your customers and then your vendor. Now, another important part of construction is the materials, which is inventory. Now, the inventory is very important because at the heart of a construction project is the inventory that you require to execute that project. So the system also gives you the room to manage inventory. How do you manage inventories? You go to list, you select item list. This is where you're going to add all the relevant inventories. Like you see right here, we already have the services provided by the construction. You can see site work, evacuation, concrete, floor farming, wall farmings. So these are services provided by the construction company. You can see right here, these are all the services provided by the construction company. Now, what of the inventories they manage? For the inventories, they can as well go to item, new, and then you select inventory parts. So inventory parts is what you use to manage all the construction materials for the construction company or the contractor. So let's say we have inventory like cement right here, which is it. And then how do you measure your cement? You measure them in bags. So you come here, you enter unit of measure. You say we measure the cement in bags, then you click on finish. Now, as at the time we're setting up this book, which is 31st of December 2022, what is the quantity of cement in store? We have 45,000 cement in store. This is it. And then what is the average cost of one cement to us? The average cost of one cement to us right now is like an average of, let's say, 500 USD, for instance. So you have this average cost of a cement and then construction income. If we sell the cement at some point, but most of this cement will be utilized in construction. So that's why you just enter select construction income and then click on save and close. But where you'll be needing this cement more is when they are being used on site. And I'm going to show you how to record the inventory usage on site. So we're going to use this as an example. Then you click on next. The next one you have your sand, or let's use your gravel for instance, and you measure your gravel in bags too, or some could be in kilogram. Some inventories could be measured in kilograms, some could be in liters, some could be in pieces, depending on that inventory itself. Then 31st of December, how many of these do you have in store? We have 7,000. Have 7,000 install, and then you click on OK. So we've added two. So let's work with these two inventory parts. These are services rendered by the construction company. You can see here they do interior walls, ceiling and covering, electrical and lighting, heat and cooling, plumbing, windows, whatever. So you can see these are different services rendered by this construction company. You have evacuation, concrete, masonry, and everything, roof framing, and all. So that's for inventory. Remember, we are still talking about setup, basic setup for construction company, and then we have your tax as an inventory company, as a service-based company or construction company, you are required to also pay tax to the government. So you come here, you go to manage tax, sales tax preference. This is where you set up your tax. Do you pay your tax? Yes. Then you can quickly come here to add your tax, sales tax item. So here you call it sales tax, and then what's the percentage? 30%, for instance. and then who is your vendor. You can come here, add new, and then USIRS, and then you click OK. Additional information. This vendor type is a tax agency. You click on OK, and then so that is how you add your tax. When do you want to untick this? The reason why you have to untick this is because on your invoice, when you create a tax, when you create an invoice with tax, it will be displaying this, meaning that it's taxable. When do you owe your tax? Is it, do you file your tax on a monthly, quarterly, or annual basis? You have them here, and then you click on OK. So that is all about tax. You see tax more when we create an invoice. And then your bank account and supervisor's cash. Now, bank account is very important because every money that comes into your construction company, they go to your bank, and every money that leaves your construction company, they actually come out from your bank account. So, meaning that you also need to set up your bank account on that chart of accounts. So you can see how important chart of account is. So you come to account, you select new, the account type is a bank, and then you click on continue. The system will not recognize this account as a bank because the name is JP Morgan Chase, or um, let's say, let's use Citibank again. System will only recognize this account as a bank because the account type is selected is bank, not because the name is Citibank. They are two different things entirely. If I change this account name to income and I enter account type as Citibank, system is not going to treat this as a bank. It's going to treat this as an income transaction. Why? Because the account type I selected is income. This is how important chart of account is, and that's going to distort your record because any transaction that passes through this account, instead of it to be treated as a banking transaction, it will be treated as an income transaction, which is wrong. So you have to select your bank as the name of that account. And then your balance in that account, you're going to input right here. And then the statement ending, which is our opening balance day after the first, you click OK. And then if you have another bank to set up, you can as well click OK. So if you have multiple banks in different regions, so let's say you have a bank in Germany, you go to account, new, bank, and then you click continue. Don't forget to always add your account number when you're setting up a bank. So again, let's assume we have Bank of Germany. Like for instance, so the country here is going to be euro. So I'm just using a fictitious bank, but just for you to understand what the most important thing is, just to understand the process that I'm using to set up your bank account. So it could be any name of the bank in your region. So that is why I just need to select Bank of Germany, euro, and then the opening balance right here, 45, right, billion, and then you can as well come here, input the balance. So let's assume again that 1 euro equals to 1 USD. We click OK. Now, for some regions where your home currency is in USD, euro, or pounds, you can as well download your exchange rate online. You can download your exchange rate online under manage currencies. So you can download your exchange system, automatically update your exchange rate for you. So that is all you need to know about the bank. And then for supervisors cash, now there are times where you have different supervisors in different region, and you need to manage the cash that is being given to them. So you can come here under banking, you call this site supervisors cash. Site supervisors cache. You click OK. So we have site supervisors cache already set up right now. And then you can then go back to accounts, new, banking. So if you have supervisors in different location, you can, so let's say you have US supervisor. Let's say so this is the one supervising in US, which will be a sub account of site supervisors cache in US. So you can have for US, you can have for Germany, you can have in different location, and how much would you give to them? Or your another name you can give them, you can call it country manager, or maybe US branch. depending on whatever name you call them. Now, the essence of this is if you have cars that you are disbursing to different branches in different region or different locations or different sites, you can also use this to manage the money that's being given to them. So here we can create the balances right here and site versus cash. So this help you to manage the money that you're giving to each of the supervisors on site or country managers or different location. So you can see we have them right here, site versus cash. That is it. So you can have different locations and their currencies stated on the system. Then we have the next one, which is inventories of construction materials. Now we've discussed that before. And then site location, which is the class that we activated earlier. Now let's move to transaction properly. Now the first one is how do you create a quotation? How do you quote for a project? When you go back to home on your system, to create a quotation for a project, we use estimate. So estimate is for quotation. When you want to send a quote to a construction client, you have to use estimates. So on the system, there are some regions that call it estimate, some call it quotation, some call it bid or proposal. So whichever name you call it, they are still the same. So I can as well come to formatting and change the name to quotation. Change the name to quotation, and then here I'll call it quote number, and then you click on OK. So we can see we've changed the name. So let's assume we want to send a quote to one of our clients. So let's say we are sending a quote to SAP Enterprise Center. So we want to send a quote to SAP as regards this project, SAP Enterprise Center. The question is, are we going to select the customer directly itself, or are you going to select this particular project? Now, none of them is wrong, both are correct. But for the purpose of reporting, it's important to select SAP Enterprise Center, which is the project itself. And again, any transaction that passes through this project, SAP Enterprise Center is already classified as a project owned by SAP based on the configuration that we did earlier. So you don't have to bother your head selecting the client again. You have to select the project. The essence of selecting the project is for the system to give you project specific reports. So when it's time for you to check project profitability reports, this is what the system will need from you. So that's why you must select the project itself whenever you want to create a quotation. So you go to SAP Enterprise Center. The next one, what are we quoting for? So this is where you're quoting for different services that you're rendering. So let's say you're quoting for concrete, you're quoting for floor frame, you're quoting for roof frame, and then you're also sending a quote for, let's say, windows and trim or plumbing work, then electrical and lighting. So you can see right here. So this is how you create a quotation for each of the services rendered. Now, this is a serviced invoice. This is not this is a service invoice, so we don't need all this. Now, the reason you might probably need all this again is if you have different um maybe quantity that you are buying, maybe different quantity of item that you're buying, then you might probably need to code that here. But that will come under the inventory section. This is a code. This is for services rendered. So all I need to do is customize this code. You can customize this code and take out all this quantity because this is a service invoice. So here I will go to column and then deactivate quantity two under the units of measure, deactivate this, and then under the cost, deactivate this, and then deactivate this. Then I'll click on OK. So this is a service invoice. You can see right now the service invoice. So we can then impute. So, oh, sorry, I need to leave that. costs. To leave the costs and then activate costs right here. Okay. So putting the cost of each of them. So I'm putting the cost of each of them right here. So if it's taxable, you come to tax and then you select taxable, you select taxable, you select taxable, you select taxable, you select taxable. Remember we set up our tax earlier on and then you can come here and set sales tax. System automatically calculate the tax on that. Now notice something on the invoice. SAP is based in Europe. So you can see, and then when we set up SAP as a currency and as a client, we selected euro. So meaning that our invoice will automatically be in euro. You can see the reason why your invoice is in euro. And again, system automatically displays the exchange rate, which is what the foreign currency income is in USD equivalent. So you can see if 1 euro equals to 1 USD, then 293,800 will also be equal to 293,800 in our local currency, which is USD. And then the date of that transaction, I can as well enter the date right here. Now remember, this is a quotation. This is a quotation that we are creating. This is a quotation that we are creating, not an invoice. So you come here, you click on save and close. So you have saved that quote. Now, when you move to invoice, invoice means you have started the job. Invoice means you've started the job. So we can as well come back here and then select create an invoice. You can see here, create an invoice. Now, another instance is what if we received a bond from a bank or an APG, advance payment guarantee from a bank. I'll come to list, I'll select chart of accounts and then right click, new. So this is going to be like a loan. You click on continue. What is the name? We're going to call it a bond, bank bond or corporate bond. Or some call it APG, advance payment guarantee. So you click OK, save and close right here. So how do we receive this money? Now, why are we receiving this money in the first instance? We've been awarded that project, but they're not going to pay us that money immediately. They are asking us to start with what we have, and they are going to invoice us based on the progress done so far. So we're now going to our bank to say, we need a loan from you. We need a loan from you in respect of this project. And what is the name of that bank that we need that loan from? So let's say we need a loan from Bank B, so in the US, to get that project done. So we're going to get a loan from our bank in the US and then move the money to Germany. So here we're going to add a new bank account. We're going to add a new bank account. So let's also assume that we have a new bank called JP Morgan, and then you click on save and close. So this is a bank that we already have in the US. Now this bank is giving us a loan, which is like an overdraft in respect of that amount. So you come back to this section, you go to company, make journal entries, which will be our JP Morgan against our corporate bond. Against our corporate bond. Can you see right here? So you're going to receive a loan from JP Morgan into our corporate bond account. Remember, your corporate bond is a liability. Remember, your corporate bond is a liability. So what are you going to do? You are going to move the money from your bank account into your corporate bond. Now, another thing you can do again is that as at the time we're setting up that account, you can enter it as an opening balance in your account. can enter it as an opening balance in your account. Whichever one you want to do, they are still okay. There's no difference in that amount. So let's look at this in two ways. First, we have our corporate bond right here. Right click, edit, and then opening balance as at the time we're setting up our book, 31st of December, right here. We have a corporate bond of 100 and 350, let's say the 560. That's the worth of the project. Then you click on save and close. That's first scenario, corporate bonds. Second scenario, I can come back here to edit this. I can come back here to edit this. I'm going to delete this particular journal entries. I can use journal entries right here. Okay. So let's add our corporate bond again on that chart of accounts. Right click, new. Now, when that money comes to us, it comes to us as an asset. The money comes to us as an asset because we're going to have a dedicated account to finance that expenses. So the another thing again we can look at another thing again we can do is that we can add a bank account just like we have right here, JP Morgan. Now, this is the account we're going to use to fund that project. This is the account we're going to use to fund that project. Now, if we're going to fund that project from this account, then that money will come as a loan from other company. That money will come as a loan from other company. So we can go with overdrafts. We can go with overdraft. So this is how we're going to post that right here. Right click, new, bank, and then we'll call this APG for construction, advance payment guarantee, or bond. And then you click on save and close. Now the money is coming from JP Morgan. You go to company, make journal entries. So this will be JP Morgan Chase and advance payment guarantee. And then what happened? We're going to move the money from JP Morgan, which is 500 and let's say the money is 550 million to so JP Morgan an advance payment guarantee. So here, this is how you're going to treat that advance payment. So you can say being a credit, being a credit offered for construction projects or SAP construction projects. Then we click on save and close. So this is how this will reflect in our report. You can see that JP Morgan Chase automatically becomes negative, meaning that we have overdrafts that we've collected from JP Morgan. You can see here we have overdrafts that we've collected from them. Then another thing again we can do is that you see we also have 550 on advance payment guarantee. This is what we're going to use to fund that project. So I can now initiate a bank transfer from this our APG account into banking transfer fund from APG account to our Bank of Germany in euro. So how much am I sending there? 550. So let me change this to dollar 550 So and then now first we secure the credit from JP Morgan into this advancement guarantee account or bond, and then we're now moving the money to Germany to help finance that project because the project is in euro and not in USD. So that's why we have to do fund transfer. You click on save and close. So if you come back to Bank of Germany, you can see that the balance on Bank of Germany should have increased. Sorry, let me go back. I think I didn't input the total amount very well. So, okay, this is supposed to be 550 and not 55. Mm. So, right click. So you can see we now have a new balance right here. And then advance payment guarantee is now zero, meaning that we've moved the money from APG account to Bank of Germany account. So this is what we're going to use to fund that project. So when you secure a project or as a credit or as an overdraft, you're going to use journal entry to post that. Now, another option again is if it comes as a loan to you, we're going to set up a loan account. You're going to set up a loan account just like you have right here, loan, and then against the bank where the money is coming from. You can see here. So if you have a fresh account, let's say you have um, a bank account called Bank of America, set up the bank. Okay. So let's assume it's coming as a loan. The first option I treated was if it's coming was overdraft from the bank. But if it's coming as a loan from that bank, what are you going to do? Your loan account will be credited with equivalent of that amount, and then your bank account will be debited. Why is your bank account debited? Because that is where the money is coming in. Because your bank will be credited without value. So you can see here. So you go to credit your loan account because loan account has a credit balance and then your bank account has a debit balance of 550, and then you click on save and close. So which means that on our report, you can see that your Bank of America has increased. Now with this 550 here, it has created a loan, which is a liability to you, which you're expected to pay back. So it is this one that will makes up your bond, um, that will determine your bond expenses as you pay interest on that loan. So you have two scenarios. Which of them you think, any of them you think is fine for you? It's better. It's correct. If it comes as an overdraft, you're going to treat it as an overdraft. If it comes as a loan, you're going to treat it as a loan. So that's how you treat advance payment guarantee. And then we have invoicing, receive payment, and withholding tax. Now, assuming again that you have started the project and then you want to invoice the client based on work done so far, what are you going to do? You're going to create an invoice. Now, before you start creating an invoice, you have to start ordering new materials to finance that construction project. So you're going to send a PO to your construction company account. You go to purchase order, which you're going to send to the vendor that supplies your materials to you. So you click on purchase order, select the materials, vendors, and then The item that you're going to buy, we're going to buy cement, we're going to buy gravel, and then what quantity are you buying from them? You want to buy 3,400 bags, 34,000 bags, and here you want to buy 1,200 bags too. At what rate? You're going to impute the rates on the system, and then you click on save and close. Remember, this is a purchase order. It was not going to hit your ledger account. The next thing is to receive inventory with bill. You select the name of the vendor. You can see it should say open purchase order exists for this vendor. Do you want to receive one or more of this order? You click on yes. So everything you have imputed under purchase order will automatically be imported into your bill. You click on OK. So you can see everything you stated on your PO. So, but it doesn't mean that you're going to save immediately, because sometimes the quantity of material received is different from the actual quantity. So here you enter the actual amount received. So if the actual amount received is equal to what you've ordered, you leave it like that. But if it's different, let's assume out of 1,200 bags ordered, you only have 1,000 bags that was sent to you. You have that right here. Now, there are some expenses that are called billable expenses. Billable expenses. Right here, you can see this is billable. This is billable. So let's go back to edit, preferences, and then we have time and expenses. So you can see right now we have what we call track reimbursed expenses as income. Create invoice from a list of time and expenses. So you can click here, you can click here. What does that tell you? There are expenses that you incur, and those expenses are supposed to be invoiced back to the customer as a billable expenses. So we also have that right here. So billable expenses are expenses you will incur as a contractor or a construction company, and then you're expected to invoice that customer that particular expenses with your markup. So here you can say we have a billable expenses and we mark up by 5%. When we mark this up, it goes to a construction income account. So another thing that makes up your income is construction income account too. Then we click on OK. So what have we done so far is because anytime we pay for certain expenses that the client is supposed to pay us for, or we incur expenses on behalf of the client, system allows us to convert our expenses into a bill. So here we have billable expenses. So that's why you mark that expenses as billable. Okay, so right now we've imputed this, and then you click on save and close. So if I go back to enter bill right now, you can see here I can mark some expenses as billable expenses too. So, well, we'll discuss that later. Now that we've received the inventory, the quantity of inventories we have in store will increase by the new order. So if you go to inventory valuation summary, you can see right here our inventory has increased. If I double click on this, you will see that our inventory has increased. So let's go back to the enter bill and look at the dates that bill was posted. The bill should be posted on the second, and then you click on save and close. Again, if you go back to enter bill, if this expenses is billable, you can come here, check. You have to check this if it's a new expenses. But we'll discuss that. Like I said, we'll talk about that. So let's proceed. Now, the next point is once we start incurring that project and we're using materials in store multiple times, how do you post material usage in store? Remember, the project has to start before you invoice the client. That's how some construction company work. In some other construction company, client has to make an advance payment before they start the project. Either way, if client has to make payments before the project starts, you'll be required to invoice them. But if the project is supposed to start first before the client makes payment, that means we have to start posting all the materials that we have used. How do you post material usage? You go to inventories, you see inventories center, and then adjust quantity on hand by value. So what is this supposed to do for us? It's helping us to account or to expense certain part of that inventory that is being used, which would automatically become a part of construction material costs for us. So construction material cost is the part of our construction materials or part of our inventory that are being used for that project. Now, under the customer, we're going to select staff training center because this is a cost to us, and we're going to assign that cost to staff training center. So that's how you assign invoices to a particular project and then cost to that project too. Under class, we can also select the region. If this project is going ongoing in Germany, you come here, you select Germany. For us, we're going to be using class to track region. So Germany, this is where the project is ongoing. So what are the items that we're using? First, we're using our sand. Second, we're using our gravel, which is it here. Now look at the quantity of sand we have, 79,000. Look at the quantity of gravel we have. So let's also select the dates that we're posting that transaction. Now, out of this 79,000, we have used 9,000 bags. You see minus 9,000 here. That will give us a new quantity of 25,000. Out of this gravel, we have used 600 bags. Now, the reason why the quantity change is because of the date. The balance as at 31st December 2022, you can see right here, you see 79, but the date of that transaction is this. So this is correct. So 2nd of January 2023. So you see 600 bags out of 8,000, 9,000 bags out of 79,000. So the portion that will be assigned to this construction material cost will be 9,000 and 6,000. So you can see total value of your adjustment is 4.5 million. So in our report, we're going to see 4.5 million as construction material cost, which is the value of these materials that are being used during that construction. So this assume that we have started the project before the client makes payment. You go to save and close. So if I go to report and then I check my profit or loss report, so you will see here, you can see construction material cost, which is that same 4.5. That's the value of that construction materials that has been used so far. So this is how you record material usage in store. Now, if the company decides to pay you and they say invoice us on what you've done so far, you can go to invoice. You can see you can invoice for time and expenses. This is where you invoice for the billable expenses, but this is where you create a normal invoice. So I'll come to create invoice and then select SAP training center. It will display the, you can see here, that's the quotation we sent to them earlier. You click on OK. Now, this is progress invoicing. I'm going to invoice for the entire project. I'm going to invoice for a certain percentage of the estimate. I'm going to invoice for selected item. If we're going to invoice for a percentage of the estimate, let's assume 20% of the job has been done. You come here, you input 20%. You click on OK. So what happened is that 20% of that estimate will automatically be imported into the system. So 20% of the quotation that we created earlier, we have imported there. So we are invoicing the client based on the job that has been done. And so far, we've done 20% of the job. So that's why you are seeing 20% of the estimate being imported as invoice. This is where receivable comes in. The moment you invoice them, system will now classify or post this 56, 58,760 to account receivable, meaning that we'll be expecting SAP to pay us this money in respect of SAP Enterprise project. So I'll click on save and close. Once you click on save and close, the next thing is to receive payments. I'm going to receive payments into our bank account. So this, you can see the workflows involved when you are setting up QuickBooks for a construction company. A lot is involved, a lot is required, but if you get them right, you most likely not have issues with your account. So we are now receiving payment from SAP Enterprise Center, 58,760, and then assume that $1 equals to €1, and then you click on save and close. Then we go to record deposits. to pay the money into our bank account. Remember, this is euro. You can only pay euro into a euro account. You can't pay euro into a dollar account. Then you click on save and close. So that's the workflow. So if you go to our banking, use register to check our euro account to see if the money is reflected there. You click OK, OK. So this is 58,760, which is the money that we just received from that client. That's 20% of the project done so far. Now that's how you invoice the client progressively. You invoice the client progressively until you invoice for the total project that has been done so far. So that is how we treat invoicing, receive payment. Now, what of withholding tax? Let's discuss withholding tax. Assuming the client decides to withhold certain amounts from you. So if you go back to customer, SAP enterprise project, you can see here, you click on OK, come back here. We are now invoicing the client for another 40%. Click OK. You can see 40% of that project right here has been imported. The same process, the same procedure, just like I explained before. Click save and close. But this time around, the client is not paying us total value of that invoice. It's giving us a certain percentage of that invoice. So out of 117, the client decided to pay us just 110,000 USD. So 110,000. You can see right here. So we have a balance of 7,520. So normally we would have said, let's leave this balance as an underpayment. But because the client is saying, I'm withholding this 7,520 from you guys, and I'm going to remit it to the government, this becomes withholding tax receivable, which is a credit to you as the service provider. So what are you going to do? You write off the extra amount. If you don't write off this extra amount, system will carry this as a balance in the name of that client. But in the real sense, they've paid us. They are not owing us again. So you're going to click on write off extra amount, then save and close. It will then ask us, where are we writing this to? We're going to write it to withholding tax receivable. So withholding tax receivable is going to be a current asset to us, which is a credit. So other assets, which is a credit to us, and then maybe the region, we then click OK. So what is it telling us? It means that we have a credit. So when next we want to remit tax, the same way they're going to withhold tax from us, that's how we also withhold tax from our subcontractors too. If we're withholding tax from our subcontractors, we're supposed to account for this credit, meaning that we're going to take out the credit. So it's like a claim from what you are paying to the government. Why? Because it's been withheld already by the customer. So that's how you withhold tax. You record withholding tax receivable, and then you click OK. When you click OK, the balances in the name of that SAP Training Enterprise Center becomes zero. So if I come to report customers and receivable, customer balance summary, and I can see here, there's no balance on SAP Training Center, meaning that they are not owing us for that services. And then I can as well come to customer, create statements. Let's just create a statement for SAP Training Center, for SAP itself, and then let's preview these statements. Okay, let me select the dates. This should run. So let's see if we can find another again. The first to this period. Because okay, they don't have any balance. I think it's because they finished paying us. So that's why we're not seeing any balances right here. They're not owing us. So let's go back to so here record deposits. We're going to pay the money into our bank accounts. So we click on save and close. So we receive that. So the next one to look at is we've discussed purchase order, receive inventory. Then for your expenses, bank reconciliation. So how do you post your expenses? Right now, you can see that we've already posted one expenses, which was the bill we received for the inventory supply. So when you're posting expenses on the system, you need to be sure that you are actually doing the right thing, because there are two types of expenses on the system. There are expenses that have been incurred but not paid for, and there are expenses that have been incurred and be paid. They've been incurred and paid for, and there are expenses that have been incurred and not been paid for. So those expenses are actually what you need to differentiate on the system. So it's important that we look at that very, very well. Now, for expenses that we've incurred and not paid for, you are going to use enter bill. You're going to use enter bill. You're going to use enter bill. So when you use enter bill, ADC materials, and then you come back here, you click on OK. So you select the address of that materials. You select the address. So that's enter bill. You select the vendor's address right here, and then this is the gravel. So for the enter bill, you can either use to post my expenses, or you can use to record item received. Now that expenses, you select expenses here. If it's for materials, you select items. Now for expenses, you have your chart of account to select from on this point. These are for expenses that you've incurred with no payment. But if it's expenses with direct payment, you're going to come here, you select write check, and then you select the bank account. So you will see that difference between write check and enter bill is that enter bill gives you the room to only enter the expenses with no payment, but write check gives you the option of selecting your bank account on the system. So you have your bank account on the system. So the bank account on the system is where you are going to record that you go to use to clear or settle that expenses. And then under the account, you can see we have relevant accounts on this system. So what are you paying for? Are you paying for equipment rentals? Are you paying for tools and equipment, or subcontractor expenses? Let's assume you hired a subcontractor to do a job. You have to select subcontractor. And then you also need to add a subcontractor here as a vendor on the system. So I'm going to dedicate a video on how to post expenses in QuickBooks. So that's not a key issue right here. So the most important part for you as a construction company is to be able to manage your processes from the invoicing, from the estimate to invoice to receive payment, and then your inventories on site and how those inventories are being used, and then mapping those inventories to different locations. You can see as I was posting each of the transaction, there was room for me to select a class. A class is what you select for your locations. So that is what you use to manage inventories in each location. Then we have inventory and bank reconciliation. Now, for a construction company, you need to reconcile your inventories at every point in time, because when you go to inventory valuation summary, it displays the quantity of inventories you have in store. So what I'm supposed to do is to do a physical count. So here we also have physical inventory worksheets. Physical inventory worksheets would automatically help you check what you have in store against what you have on the system. Now, what you have on the store is what you enter as physical counts. What you have on the system is what you have as quantity on hand. Now, when they do a count, you're supposed to compare the quantity in store against what you have in on hand. So what you have in store against what you have on hand. When you compare the two, if there's any discrepancies, you're going to post that discrepancies on the system. So that's what inventory reconciliation is. You calculate what you have. Now, how do you adjust this inventory when they are different? You go back to the same inventory adjustment like I discussed earlier. So if I want to adjust these materials, let's assume that the actual store is actual quantity is 65,000 naira, 65,000 bags and not 70,000. So I'll come here, I'll enter 65,000. So what is the difference? Maybe the material that was used but was not recorded. you need to come back here and post, then click on save and close. If I go to report inventory physical stock inventory worksheet, you can see it automatically adjusts to 65,000. So that's how you reconcile the inventories you have in store against what you have on the system. Then the same thing again for bank reconciliation. So for you as a construction company, there are two types of reconciliation that you must do every time: the inventory reconciliation and bank reconciliation. Inventory reconciliation is very important because it's to an extent going to help you track all materials you have in store. So the materials you have in store must also tally with the one you have on the system, because as they're using each of these materials, you're supposed to account for that material usage in store. So it's very, very important. So that's what reconciliation will do for you, both at the inventory level and also at the banking level. At the banking level, you are also able to compare what you have in the bank account against what you have in store. So I'm going to drop a link to watch a video on how to reconcile your bank account. So anytime there is need for you to reconcile your bank account, you're going to use that video to help. So you're going to use that video as a guide on how to do your bank reconciliation. So from all that we've posted so far, it's going to be extremely easy for us to go to reports and check different kind of reports. So for construction, number one, you are interested in profit and loss by job, which is the project itself. You can see the profit and loss on SAP Enterprise Center. So why are we saying this? Is because at the point of posting the transaction, the system gives us that room to map all the income and also all the expenses to this particular project. You can see so far we only have 135 that we've received, and then this is what we've spent. What does that tell you? It means that the client wants us to incur to use our money to run the project while they make progress payments, or while they expect us to send progress invoicing based on the work that has been done so far. And then still under the report, we have the balance sheet, we have the balance sheet by class. We also have profit and loss by class, where you're able to see profit and loss by region. You can see this is for Germany. Any transaction we don't classify under class, it becomes unclassified. So the essence of this again is to help us see the profit and loss of the profitability of each of the region that we are carrying out different construction activities. Now, some projects may be profitable as individual, but at the end of the day, in terms of that region, it may not be profitable, maybe because of government policies. So it's not enough to look at the particular project you are executing. It's also good for you to look at the region, the environment. So, and that will also tell you whether it's also a profitable environment. If a project is profitable and that region is also profitable, you can carry on a business in that region. But if a project is profitable, but that region is not profitable, then there is an issue somewhere, which is the advantage of tracking your project by region. Then we have other reports that you can check. We have your balance sheets right here. You can see. So all these are updated real time for us. Now you can also see the loan that we collected. You can see this is the overdraft from JP Morgan Chase, and then you also have the loan that we also recorded. So these are two different transaction scenarios. It depends on whatever happens or whatever applies to you. That's where you then know what to use. We also have our statement of cash flow on the system, where you see how cash is being generated and how cash is being used, and then the cash you have at the end of the period. You have your receivable balances, which shows all the customers, and then you have aging summary. We have your revenue, then you have your inventories, which shows you the inventories you have in store. You can as well look at your deposit details. And then under the accountant and tax, you have your trial balance. Trial balance is generated automatically for you on the system. You can see here for audit purpose, they might require this to run a check on the accuracy of each of your ledgers. And then we also have audit trail. So we have a lot of reports you can explore. Then there's room for budgets. So if you also do budget for construction, we have that right here. So the first thing you need to do is to go to company planning and budgeting. Planning and budgeting will help you set up budgets for each of your revenue heads. And then as you're posting transactions, you are also able to check whether you are overshooting your budget or operating within limits. You can see, so you can add budget for different account heads on the system. So this explains the most important thing you need to know about construction. And if there are areas of your construction company that you also want me to talk about, you have questions, feel free to drop comments the section below. I will probably respond to that. But I hope this video is able to help you understand how to set up QuickBooks for a construction company.